Okay, MegaWhale team, welcome back to the channel. Thank you for tuning in. I hope you're all having a fantastic day today. In today's video, we are taking a deep look into Bitcoin short-term price action and macro charts, discussing the possibility for a rally into the weekend or whether or not Bitcoin is going to see that final move down to 57,000. We're going to be diving deep into exactly what is happening, the key levels you should be watching, and the potential macro implications of this recent correction. Before we do get into it, smash that like button, hit that comment button, and subscribe to the channel. We post daily videos of Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you were interested in, join us on Telegram. It is the first link down below. You will get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop with cryptocurrency, with Bitcoin, and the relevant economic news. And if you were interested in taking your trading to the next level, join us in VIP. Our VIP group has been around for 45 months, a very, very long time. You can find in our VIP, we post trading setups with exact entries, exact targets, an amazing trade we just had here on PopCat yesterday, exact entries, exact targets, exact stop losses, trade justification, exclusive analysis, and so much more. You'll also get access to all of our group chats, our general chat, our trading chat and education chat, our daily video help, news, and trade setup chat. Check it out, guys. Contact me in the pinned comment of the free channel by clicking my name. You can find our trading track record and a video showing you inside the channel all over there. Check it out, join up, and we'll see you in there. Let's dive into the video. So like we mentioned in today's video, we are discussing not only the weekly, not only the daily charts, not only the macro and high time frame and the possible implications this short-term correction has had, but we're going deep into the short-term price action itself. Are we going to see a continuation here? Are we going to get that next leg downwards into those $57,000 lows? Are we going to see a drop into the weekend before we go into up-only mode? Or will we see a short-term relief bounce to retest this prior area of resistance, this area which was one support at 62,200. That is what we're answering in the video today. We'll get into it when we jump into our short-term analysis. But starting off on the market data, 24-hour volume down 10% at 148 billion, 24-hour liquidations down 20% at 192 million. Of the 192 million, a massive 143 million in liquidations have come from long positions and 48 million coming from shorts. Once again, people are just so programmed to long every dip after what we saw in September. They are following through that same behavior. Now again, you need to trade with the trend. When you are in a higher time frame uptrend, when the strength is building, when momentum is rising, you can get away with that. But if you're just going to try catch every single bottom and try catch these falling knives in a steady downtrend, you may find yourself getting burned, particularly if you're using higher leverage, which is what most people are probably doing right now, which is why those liquidation data is 148 million when Bitcoin has realistically been chopping more or less sideways over the last 24 hours. So even with this small amount of volatility, a lot of people are still getting chopped up. Again, we'll come back to this in a second. The DXY, again, pretty strong bounce. As we mentioned yesterday, with the global conflicts escalating, we do generally see the dollar strengthen in times of fear, in times of conflict, and that is exactly what we are seeing here. Now, that doesn't take away from the key levels. The key levels remain. We have this year-long diagonal uptrend, as represented by our structural pattern, our symmetrical triangle formation. If we do retest this level, we are watching for rejections from there. That would be an ideal rejection point. Again, we can use the DXY as confluence for Bitcoin, meaning if Bitcoin reaches 57,000 as the DXY retests this level, we do expect a rally. So we can use confluence between the charts over here because they are mostly inversely correlated on the higher time frame. So watching key levels on DXY can help you when you're trading Bitcoin. Even on the short time frame, it does provide some assistance, hence why we go over it in our videos. So again, breaking below this horizontal support, sustaining below this region, we do expect extended corrections into that 95-94 region. That could take about 6+ months to play out if we do see that downtrend start. While we are again underneath this 1.5 year long uptrend, that is the expected move. If we somehow break above here, which I do not think will happen. If it does happen, I don't think it will sustain. Then we could potentially see continuations. Again, this is a very unlikely scenario. So the likely scenario is still to go down for the DXY. Looking at the S&P 500, holding pretty steady here, 21 hours for the weekly. Unlikely we see a steep correction moving into the close. It is more likely when the candle opens next week, we'll get more of a definitive understanding of where we are likely to move toward. At the moment, provided we sustain above the weekly high at 5,680, we are looking for continuations. This is a perfectly healthy correction. Any sort of pullback, again, can be bullish or it can be bearish, depending on the context of which the pullback actually develops in. In this instance, a pullback to retest weekly highs will be considered an attempt to flip this resistance now into an area of support. So far, so good. Worried if we drop below, I'd be concerned. Until then, all well, all good. All right, let's go ahead and jump into Bitcoin. So as we said, we've got a bunch to get into, guys, but before we do, if you do want to support the channel, support me making these videos daily, and support yourself, sign up to one of the exchanges below: BitGet, BitUnix, or BingX. Again, all of them are slightly different, but you'll get your 15% trading fee discount for life, no matter which of those exchanges you sign up to, using my link below. So that 15% discount can build up to a 45% trading fee discount based on your trading volume. Again, the more you trade with, the bigger that is going to become over time. So go ahead and sign up with the links down below. We'll play an ad and we'll jump into the video. I'd like to introduce our partner, BitUnix. BitUnix is a global, non-KYC, no country restriction exchange, making it a perfect exchange to trade on if you're from the USA, from Canada, the Netherlands, or just prefer to trade without KYC. This exchange is a futures and spot exchange with over 200 different trading pairs and some of the lowest fees in the game. If you sign up with my link down below, you'll get access to 15% off your trading fees, as well as an exclusive reward center where you can claim up to a multitude in USDT prizes. So go ahead and sign up with my link down below for 15% off, and I'll see you in there. Okay guys, let's go ahead and get stuck into it. So first and foremost, let's discuss again on the short term, the critical levels we are watching for reversals to develop from. Now again, if you have been following the channel just in the last week, I know a lot of you are probably new here, but if you've been following the channel just in the last week, you would know that we have been bullish the entire way up from those 52k lows, and we were telling you at this level of consolidation, we were telling you very clearly that we were taking profits on our long positions, and we were seeing exhaustion develop on the charts. We saw that we had our downtrending RSI, we saw that we had rising price action. This was indicative of exhaustion. We saw exhaustion develop, and exhaustion doesn't always lead to reversals, but it always needs to be taken at face value. We need to accept that exhaustion developing at the end of a trend could potentially lead to a reversal, and in this instance we saw that the RSI eventually broke down, triggering that again during the period between the 17th of September onwards. Momentum, which has been rising, officially flipped negative, which we then eventually saw the price action follow suit. Again, the momentum, the RSI breaking down, was a leading indicator for the price to eventually break below this monthly long uptrend we sustained above. Since then, we saw numerous short-term corrections, resulting in a move towards our first base of support at the $60,000 region. This base of support now has been providing support since the beginning of October, since the 2nd of October, and when we take a look on it, the short term, you'll see just how that has been developing. Again, this area is the first potential bouncing point. Have we developed a reversal from this area yet? No, we haven't. We'll be discussing what we need to do in just a moment to actually see that reversal develop, and then how high that reversal can take us. While we sustain above 60,000, there is still a chance we do see a drop into this lower area. This is going to be 0.1, this is 0.2 of our uptrend. We could see a drop into 57,000 while we sustain above 60,000, provided we have not yet printed a reversal. So if we print a reversal above 60,000, we will likely not see 57,000. But while we struggle to print a reversal, which is happening right now, the possibility for a correction into 57,000 still exists. And while that possibility exists, we need to be aware of that. So let's jump down into the short-term charts. We're going to start on the hourly price action right up here. We can see that this is going to be the hourly downtrend. I want to focus on this larger downtrend first and foremost. This is going to be our hourly downtrend. We can see we have actually broken above this downtrend on the hourly twice now. We're struggling to sustain above. We'll discuss that in a second. We can see we have broken above this trend line twice on the hour. In fact, we are kind of hovering around that level, kind of like jumping on it, breaking above it, breaking back below. We're really playing with that trend line. And what we can see here is that with the breakout, we look for more than just the price action breakout. If you know and you've been following me for a while, I look for three things. I look for trend, I look for structure, I look for strength. These are three validation methods I use to confirm whether or not the price action will sustain upon breaking a trend line. In this instance, we have got trend. The trend of the price action was able to break. This is the downtrend. If we look at structure, do we have a relevant structure developing upon the breakout? No, we do not. We just have isolated trend lines. And if we look at strength, do we see any indication that the price action has strength behind it? Let's take a look. Looking at the RSI, in fact, we can see a bearish divergence developing into that breakout, which is suggestive that we do not have the strength required to actually validate and sustain above this trend line as we speak. That increases the probability for two things. Number one, fake outs and deviations, which we have seen twice now on the short time frame, an inability to sustain. And number two, a potential risk for a continuation back downwards. These are two real possibilities we are watching now. So, what do we need to see for the price action to validate a continuation higher? We would need to zoom to a slightly lower time frame now and watch for our moving averages. What we are watching now is going to be our 50 EMA on the 45-minute chart. We can see the 50 EMA upon the point at which we broke down was at the start of the downtrend, all the way back on the 30th of September. We have been below the 50 EMA, retesting on the 1st of October and rejecting, retesting on the 3rd of October and rejecting, and retesting on the 4th of October recently and rejecting. We are watching for the 50 EMA to now flip to validate that we are going to see a continuation upwards. If we see the 50 EMA flip, where are we watching for the price action to go towards? We are watching our prior areas of resistance, specifically 62,300 to 62,600. We are watching for a move into this gray box, grabbing that upside liquidity before we then decide to see a continuation downwards, or if we have the strength to continue upwards. So strategy or plan number one, at the moment, to be aware, the downside risk to 57,000 is very plausible. The short-term price action is not showing much confidence in regards to breaking out of this trend line, and therefore we are now watching our moving averages to get a little bit more confidence if we do see continuations. For us to be confident for a continuation to 62 plus, or 62,000 plus, we would need to see a break and sustain above the 50 EMA. Until then, the risk of a correction still is present. Break the 50 EMA, we will see a continuation upwards into our next resistance, and that move upon the breakout of the trend line is complete. That is done. We move on to the next thing. Until that happens, there is a risk we go lower, but like we have said many times, the risk of a move to 57,000, although it is possible, is not probable. It is not the likely move. However, it should be aware of that possibility. So if it does occur, you can capitalize on that move before we head back upwards. So again, if we do see that drop down, you should be able to capitalize on it because you should be aware of that move and you should understand what that move particularly means. So at the moment, we are moving into the weekend. The price action is getting a little choppy. We are watching for more confirmation of continuations. While that $60,000 level is able to sustain, again, we can see the $60,000 level right over here as represented by the support level. We are expecting the likely move to be a move into that 62,000. The question is, are we going to get that immediately, or are we going to drop back into this region before we do that? But overall, the expected move is going to be a move upwards, just maybe not immediately, as we do not have that momentum developing at a level of which we would like to see to be confident to see that move upwards. And that could be a consequence of so many different factors. We're not going to get into it in the video, we just simply won't have time, but know that we are watching for those trigger points to be more confident. So as you can kind of get the vibe we are kind of pushing right now is as we're moving into the weekend, in between a major support and major resistance, we do have to be a little bit more cautious. There are a little bit more risk at the moment, taking longs in this region, and again, taking even shorts in this region while we sit at 60,000. Sometimes trading is about predicting, sometimes trading is about sitting back and reacting. In this instance, right now, it is about sitting back, reacting to what happens, and setting plans to capitalize on those different possibilities. And that is exactly what we are doing. You don't have to sit there and try to think about, is Bitcoin going to go up here and then down here? It doesn't even freaking matter. Just identify the key levels where if Bitcoin were to retest, and then have a plan set. If we see X, Y, and Z happen at these levels, I'm going to take a position to this level. You have to create these narratives and these plans, and that is how you trade. You don't trade by flipping a coin or having a crystal ball or going on Twitter and drawing vertical lines to the moon. That has got nothing to do with it, all right? It's a methodical process where you premeditate different plans and you execute those plans based on strategies which you have tested and developed, or testing and developing. That is it, guys. Let's go ahead and jump to the higher time frame. So like we said, the correction does have a possibility to go lower. We do have a possibility to go higher, but even if we retest this level, this is a resistance until improvement not. Only upon the break of 62,000 will we really be in the clear, and only upon the break of that 66 high, which is over here, are we going to a new all-time high. I will say with confidence, if we break this level, I do expect Bitcoin to go to a brand new all-time high above here. Meaning if we break this trigger point, I will expect Bitcoin to move to a new all-time high. So that is really that objective the bulls need to break above. The process to get there is challenging, but that is where we need to break above. So let's talk about the implications on the high time frame chart and then wrap up this video. A lot on the short term today. So implications, high time frame chart, momentum is still positive, although it has dropped down a little bit. Bitcoin is still within the descending channel formation. Not too much has changed on the weekly, other than the fact that we've seen a pretty steep correction to retest the midline. The daily chart is kind of where it is at the moment, because this is where we are kind of finding some support. As we can see on the daily, we have now had 2 closes, well, 3 closes, including this large wick, above the midline. Again, going to show how important this 60,000 support is. Our September open price as well, a very, very key level of support we need to hold. A drop below, we see 57,000, we continue upwards. If we are able to sustain, as we said in the short term, we will see a move to 62 to 63,000, which is going to be this high over here, these lows over here, before we then decide to see a continuation or even continue to high points. But a very critical level is 60,000, and this is why we're saying be patient, because 60,000 is going to strongly determine the next move. This is about a 4 or 5% pullback. This is about a 4 or 5% rally, and that is a pretty significant sum in Bitcoin. 4 to 5% is a large move for Bitcoin. It is not a small move. It is a considerable move for Bitcoin. So keep your eyes on that. Now, if we do zoom out, the high time frame context hasn't changed. And as we've said, the price movements between range highs and range lows within a range is all considered. It is literally all considered healthy price fluctuations. We as humans like to identify and create patterns. We like to try find or explain things that sometimes aren't explainable, but the objective reality is, while Bitcoin is in this range, particularly the descending channel formation, there is no set rule or criteria in regards to how many times the price is able to swing toward the up and low side. We are in the range. Price fluctuations are expected. Only upon the break of the range toward the upside or the break of the range toward the downside will we have confirmation that the price action is going to exit this range. Meaning if we want to see 80,000, we still need to break the range high. If we want to see 45,000, 42,000, we need to break the range low. And you should not expect either of these things to occur until they do occur. Now, there is a slightly greater probability we see a continuation higher based on various factors. This is going to be the actual structure itself, being a bullish continuation pattern, being that momentum has flipped positive for the first time within this structure on the weekly, being that we do have multiple technical indicators on the higher time frame charts on the weekly and 2-week, suggestive that Bitcoin is in a macro uptrend, such as the fact that we are above the leading span A, we above the Gaussian channel upper band. All of these are suggestive that Bitcoin is in a macro uptrend. We above our yearly resistance highs. This is a very key level. Basically, below here we enter a bear market. Very, very important we remain remain above this region. And of course, on our 2-week, we are above the baseline of the Ichimoku cloud. Once again, a significant level, this red line, a very significant level. While we sustain above here, we are moving into a macro continuation. So there are a lot of points here for the bulls. There are very few points for the bears. Other than what is really happening on the short time frame. So like I said, we can see bullish pullbacks and we can see bearish pumps. Okay, it is about context and identifying, what is the context of which this move is actually occurring in. Just as we saw the breakout, this was not a bullish breakout, as momentum was negative. It was a bearish rally. It was a bearish move toward the upside. So context is very important. So watch the short-term charts, guys. Don't get too stuck into it over the weekend. I would like to see how the weekend develops. Again, if we want to zoom out, it is very possible we could develop a range between these two levels. Again, we do have a major support over here. This is a major support. This is a major resistance. We are more or less watching how Bitcoin reacts at this level and watching how Bitcoin reacts at this level. Between these 2 points is just chop. It is literally just chop, and this chop has zero bearing on the macro directional expectations of the price action, other than the short-term directional fluctuations between the range high and range low. So do not overemphasize the significance of a drop back into here or the significance of a rally back into here. Do not act like that is going to be the be-all and end-all for Bitcoin. Don't say that Bitcoin's rallied here, therefore going to the moon, and don't say that Bitcoin's dropping below 60,000 or going to 40,000. Those are extreme reactions to very insignificant moves on the higher time frame, or even in fact in terms of our structural levels. Only upon the breakdown of 60,000 will we see a steep correction to 57 to liquidate a whole bunch of positions before we move back upwards, and only upon the reclamation of a once prior support will we likely establish a higher low for a continuation into that 60,000 again. Thanks for tuning in. Catch you guys on the next one. See you then. Bye.